Good morning, everyone. JR with Secure Metals. I'm bringing another technical update here for both gold and silver. Today is Tuesday, April 9th, 2013, and it's approximately 10:50 a.m. Eastern Standard Time. Before I actually get into the analysis, guys, I wanted to go over some of these figures that we saw last week. Non-farm employment change, 88,000 versus 198,000. Definitely not good. Unemployment rate actually went down, 7.6 versus 7.7 we saw in February. And though this looks like an improvement, it really isn't. What we saw is that people are leaving the workforce. Both employed and unemployed are both leaving the workforce. And as a result, we're seeing unemployment drop. And this is not the way we want unemployment to drop. We want unemployment to drop because people are employed, not because people are falling off the labor force. That's definitely not what we want. This is completely the opposite of what we're looking for. I wonder if all the stimulus is being thrown away. That's obviously that's a very sarcastic remark, because I know all this money is practically being thrown away. So again, we're not creating jobs. This is the labor force participation. The decline was the lowest since 1979. I mean, we are again writing history, guys. Okay, the labor force declined by 500,000. This is not good. The economy is not it's not improving, and all we see is more and more and more debt. I mean, I guess you can kind of make sense if we were creating jobs, and we continue to print all this money. I guess that would make sense. I don't think it really would, but I guess you can make a valid argument. But the point is that we were in that 10 trillion when Obama took over. We are currently about to hit 17 trillion. And it's just not, it's definitely not looking well. Job losses in retail, 24,000. Trade and transport down 27,000. Both employers and unemployed are leaving the workforce. Private sector jobs were 95,000 versus 250,000. So again, private sector jobs we're not creating. We're not creating any type of economic growth. The economy is beginning to contract again, and we see the Dow Jones hitting an all-time high practically every single day. It's a very scary scenario that we're seeing here. This is the Dow Jones. Again, when we see these Bollinger Bands contract, we usually find a breakout to one side or the other. Again, we have a contraction here on the Bollinger Band, so I would expect a breakout to the upside. If we don't get that breakout, then of course we'd look for a breakdown. But at any rate, I also wanted to go over this. This is very good news for us. And I've really only been in this political game or paying attention to the politics really since 2006, 2007, when I got in this type of in this sector, when I got in this business. And my point is, I don't necessarily recall another time where states and government have had such a big feud. I mean, there's just a lot of disagreements between states and government. And when this government was established, it was established for the people and for the states, allowing the states to do whatever they needed to do to accommodate their citizens. And what we see is a growth of government, and the government is practically taken over the whole country. And again, that was not the point of the government. Okay, the three main roles of government, as I've always understood them, as specified in the Constitution, is to provide a militia, to also provide a judiciary system, as well as providing a stable dollar. As we can see, the dollar's lost 99% of 92% of its value within the last 100 years. So we know they're not definitely doing a good job as far as keeping a stable currency. This is a really nice article. Over a dozen states push for gold as legal tender. Okay, kind of like what we saw back in 2011 with Utah. This is from Zero Hedge. And I'll have the link below if you want to read more, if you want to read the link yourself. Let's read this. In more than a dozen states, legislators are pushing for a movement back to a world where gold is considered money. As Bloomberg reports, lawmakers in Arizona are poised to follow Utah, which authorized bullion for currency in 2011. Similar bills are advancing in Kansas, South Carolina, and other states to recognize gold and silver coins as legal tender. The legislation is about signaling discontent with monetary policy and about what Ben Bernanke is doing, which seems to confirm by this recent shift in Texas to bring its gold back from the New York bank warehouse. So the state of Texas is actually has actually put in an order to bring its gold back from the New York bank warehouse. I got to tell you, Texas is just one of my favorite states. I think I'll be moving there here pretty soon. But at any rate, the new measures would give people the option of using money that won't lose any purchasing power to inflation. How cool is this? When the dollar was created in 1792, it was pegged to 1.6 grams of gold. 1.6 grams of gold. So $1 had a value of 1.6 grams of gold. Had we stayed in the, let's get our handy dandy calculator here. So had we stayed in the gold standard, so what we do is pretty simple. I'll show you guys a quick tip on how to calculate gold in grams. What you take is you take the current spot price of gold, which is currently 1587. Soon to go much higher, I predict. 1587 divided by 31.1. That's how many ounce? I'm sorry, that's how many grams in 1 troy ounce, equals to 51.02. Times that by 1.6 grams. Your dollar would have a purchasing value of $81 with 64 cents had we never gotten off the gold standard. So as you can see, it's very easy to see that the dollar has lost a tremendous amount of strength. And really what we're seeing is I think the market is starting to realize that that dollars and general paper money is not working, and we're seeing really the global system. I think these are the beginning stages of a giant meltdown. So I think we all need to be fairly prepared for what's possible. So it's very interesting to me, some of these guys that love to talk about how gold is not really money and gold is not stable. You know, the fact is that gold is a very stable currency. As denominated in dollars, is obviously very volatile. But again, when you look at the price of gold and how it has fluctuated within the last 100 years, you'll also realize that the dollar versus, let's say, oil, for example, the dollar versus oil within the last 100 years has only fluctuated. Actually, gold versus oil has only fluctuated for about between $6 and $9, while the dollar and obviously crude oil has had a fluctuation of more than $80. So again, what we are seeing here is the beginning stages of something much bigger. You know, if we do go back to a gold standard, I would predict that prices of gold will skyrocket. If we don't go into a gold standard, eventually the dollar will collapse, and we'll see gold prices much higher anyway. So again, people. Let's see, the new measures would give people the option of using money that won't lose any purchasing power to inflation. One supporter of the bill explained, with another adding, there is a fear that the government, or Ben Bernanke in particular, and the Federal Reserve is pursuing a policy that will lead to the dollar collapse. The U.S. Constitution bars states from coining money and also forbids them from making anything except gold and silver coin tender for paying debts. So it's funny how we're pushing to go back to something that's actually in the Constitution. Advocates say that that this opens the door for the states to allow bullion as legal tender. So again, very interesting article, guys, where again we're seeing a number of states, actually a dozen or so, pushing back for a gold standard. And I think we're all getting tired of this money manipulation. We're all getting tired of the 100-year anniversary, which I predicted you will hear nothing about and in the mainstream news. And the reason why I predict that's not going to happen is because I don't think the Federal Reserve wants you to know that they exist. So they might not put any commercials out celebrating their 100th-year anniversary. So at any rate, guys, I also wanted to show this chart here, a very cool chart here. I guess, you know, you're always going to hear the people saying that we're going to see gold, that gold is in a bubble and that a bubble has burst. And that's why gold has been on a fairly tight decline. But this is a very nice chart that I came across the other day. And basically this chart explains the global central bank assets versus gold bullion. And what we see here is the greenish or the turquoise is gold, and we see the blue as central bank assets. So what we see is that as central bank assets rise, the gold prices usually catch up, and sometimes they go above, and then we obviously would expect a little bit of a decline. So what we're seeing here is the prices of gold and the central bank asset holdings. And as you can see, the more they expand their balance sheets, the more they print, the more gold goes up. And now what we're actually in this zone here, where just kind of like in this scenario, global central banks assets went ahead of gold. Then you saw gold do a little bit of a rally and caught up here back in 2010. And again, what we see here is what we saw here is again price or global central bank assets have again exceeded the price of gold. And what we're gonna hopefully see here is a move up here for the gold market, and hopefully surpass this until they continue to obviously put in more quantitative easing and so on. So again, this is a very nice chart that really goes over how stable the gold market is, and really what we are is in some sideways consolidation, kind of like what we saw here, kind of like what we saw here, a few consolidation zones throughout the way, and a giant consolidation zone here. And of course we are looking to go higher, and over here you see the bigger picture. Okay, so again, the central bank assets have exceeded the prices, and now it's time for gold to do some catch up here. Okay, now let's get into the gold analysis here. This is your daily chart here for gold. What we saw is saw a move down here from this channel. This is your current trend until we can surpass this level here, 1620. I would think that's a very strong resistant levels, but as of right now, we saw a move down to the bottom, and it turned out to be a false breakdown. So anytime you have a false breakdown, usually what you have is a move up to whether a false break up or a false breakdown. You can kind of put a case here in this scenario here as well, where you had a false breakout, and then of course the move to the downside was fast. And as it always happens here, you had a false breakdown and the move up was fairly fast. Okay, so we had a false breakdown here. The move is I do expect the move up to at least test this the high 1500, maybe 1590, and of course the next zone after that would be the 1616 zone. I would definitely expect a little bit more volatility before we get there. But again, still plenty of room. The stochastics are pointing higher. Moving averages are above us, not necessarily all that positive, but we've gone through this before and we usually know how this ends. I would really highly suggest for everyone to really pay attention to their holdings. And you know, like I said on the prior video, this is the time to buy. This is the time to sell, at least short term. Then we have longer term positions where we're going to take profits up here at the 1900 level, and then obviously continue to take more profits as the prices continue to go higher. So again, sideways consolidation here. Let me delete this one. and we have a little bit more sideways consolidation, a bit more, and now we have this giant zone here of consolidation. But again, it just seems to be a step in one. We take a few steps up, we consolidate, a few steps up, we consolidate, and a few steps up. So that's definitely seems to be the trend here. Stochastics right here on the weekly chart looking kind of like it's going to continue to go higher. It might continue to go lower again, but again, only time will tell at this point. Moving averages, all major moving averages are above us, and again, we saw the spike here. Remember when I said usually sometimes before the trend reverses, usually we'll see a spike. We did see a good spike in volume there, and again, going back to the daily chart, all major moving averages are above us. So as of right now, we would look to go over this hump here, 1616, before we continue to go higher. If we go to the silver chart here, the silver moving really nice. Again, we had a little bit of a spike here in the volume. Trend seems to be reversing, and just like the gold chart, it seems that we have tested this low. We had a false breakdown. Let me draw some more lines here. So we had let's see here, what seems to be a bit of a false breakdown, and now the move to the upside is a bit faster. So I do expect to test this 20-day moving average here, at least at 29.30, maybe 29.20, before correcting a bit before we continue to go higher. But it could be the case where, kind of like every time we rally up, guys, it is usually a straight line. If we do get out here, I do expect to get out here, you know, by my prediction is late May, early June. I expect to be back above $32, $33. And like I said definitely before July, I do definitely expect to see much higher prices in this gold market. The world as a whole is a mess. George Soros was interviewed the other day, and he says that central banks are buying tremendous amounts of gold. So he definitely does not expect gold prices to go down further, being that central banks are now in the buying in the bullion purchasing game here. Okay, so again, a lot of things that we're seeing here. Let me just finish up this analysis, and so again, stochastics are pointing higher. You have your 20-day moving average moving kind of to 4 o'clock again. We don't necessarily like that. We want to see this cross. We did see a breakout. We saw this the Bollinger Bands contract here. Then we saw a breakdown to the bottom, and now it looks like we're going back up. So at this point, we want to definitely go over this hump here. So we definitely will find some resistance over here at around 28.30, and again, hopefully we can surpass this here pretty soon. But above us is still the moving averages, and of course the stochastics are still moving to the upside, so still plenty of room to move higher here. Okay, if we look at the weekly chart. Okay, the weekly chart bounced beautifully off this 200-day moving average. If you saw my last video, I did state that we should see a move up to at least $28 zone, $29 zone before we continue to go lower, if that's going to be the case. Again, highly doubted again. Silver has been very much like gold, where it's just a few steps up. Obviously a lot more volatility, but ultimately what we're doing is take a few steps up. Over here we took a big step down, but ultimately came right back up. It was a false breakdown, came back up, and of course you saw the rally there. Okay, so at this point here, stochastics on the weekly are very oversold, so we do expect the buying. Now I will tell you that physical demand is higher than ever. I've had some orders that have been backed up, and that's definitely a good sign, because again, there is a big demand on the precious metal sector. So again, guys, I would expect the prices to continue to go higher, especially silver. I expect silver. Oh, I also wanted to show this ratio. Again, I don't know if you guys remember the ratio analysis that I do. How many ounces of silver can you purchase with gold, with an ounce of gold? And this chart will tell you. Right now we are at 56. So basically with 1 ounce of gold, you can buy 56. When the ratios go up is usually bearish for bullion. And when the ratios go down is usually very positive for bullion. We did find some resistance here at 58.5, or actually 58.25. Okay, and right now it looks like we are heading back down. Stochastics are pointing lower, and we are about to test this trend line. So it could be the case where, again, now let me draw a line here just so you guys can see this. I'll do this freehand, and this is parallel line. So this looks to be the quick trend. So we might find some support here at 58. So maybe we'll see the metals go up a little bit more before they find a little bit of resistance. And again, plenty of room to go down. So it could be the case that we come back and test this 56 zone here. Let's put a horizontal line here. So it could be that the ratios will test the 56 zone, and then possibly the 55 zone. And of course, we are looking to break this trend here before we continue to go down. So I'd like to see prices for below 55 before we can confirm further move to the downside. Okay. But ultimately, again, this is a really good indicator that bullion is starting to change direction and hopefully go in our direction. So I do expect prices to go up higher by the end of May, sometime in June. I do expect silver to be well over $30, possibly between 32 and 35 bucks. And obviously from there, I do expect to go higher. Of course, volatility in silver is pretty crazy, so you definitely do want to take your profits as you can. And of course, gold, I expect gold to continue to go higher, much more smooth, or at least in a much more smoother manner than silver. All right, so guys, that's it for today, and have yourself a great day, and I look forward to seeing you guys next time. All right, thanks for joining me. Bye bye.